Born before 1966, SSA owes you more money in 2026. If you were born before 1966, this video could be very important for you because 2026 may bring changes, increases, adjustments, and benefit rules that many seniors are not checking closely enough. And here's the part most people miss. This does not always mean the SSA will automatically send you a huge surprise check. It means there may be money connected to your age, your work record, your claiming decision, your spouse's record, your survivor benefits, your COLA increase, or your past earnings that you have not reviewed yet. Many seniors simply accept the number that appears in their bank account every month. They never question it. They never log into their Social Security account. They never compare their benefit to their spouse's benefit. They never check whether delayed credits, survivor benefits, earnings corrections, or Medicare deductions are affecting the final amount. And because of that, some seniors may be leaving money behind. So if you were born before 1966, stay with me until the end, because today we are going to break down what you need to check in 2026, why your payment may be higher than you think, and what steps you should take before assuming the SSA is already paying you everything you deserve. Before we go further, subscribe to the channel, like this video, and comment your state below because rules and benefit situations can vary depending on your personal case. Now let's begin with the biggest reason seniors are asking this question in 2026, the COLA increase. In 2026, Social Security benefits are increasing because of the cost of living adjustment. That means millions of retirees, disabled workers, survivors, and SSI recipients are seeing higher monthly payments. But here's the problem. Many people only look at the deposit amount and never check how the increase was calculated. Your COLA increase is based on your current benefit amount. So if your base benefit is higher, your increase is higher. If your base benefit is lower because of early claiming, wrong earnings records, Medicare deductions, or missing spousal rules, then your increase may also be lower than it could have been. This is why people born before 1966 need to pay attention. Many of you are already retired, close to retirement, receiving benefits, or eligible for special claiming situations. Some of you may have started Social Security early, some may have waited, some may still be working, some may be widowed, some may be divorced after a long marriage, and each of those situations can change how much money you may be entitled to receive. The first thing you must check is your full retirement age. For many people born in 1960 or later, full retirement age is 67. If you were born before 1966, you are either already near that age, past that age, or moving into the years where Social Security claiming decisions become extremely important. Why does this matter? Because if you claimed before full retirement age, your monthly check may be permanently reduced. Many seniors claimed early at 62 because they needed money, lost work, had health problems, or simply thought Social Security would not last. That decision may have made sense at the time, but it also means your benefit may be lower than the amount you would have received at full retirement age. Now listen carefully. The SSA does not usually owe you money just because you claimed early. But if your record was calculated incorrectly, if your earnings were missing, if you qualify for a higher spousal or survivor benefit, or if your benefit was reduced for a reason that no longer applies, then you need to review it. The second thing you must check is your earnings record. This is one of the most overlooked problems in Social Security. Your benefit is based on your lifetime earnings, especially your highest earning years. If an employer reported your wages incorrectly, if a year is missing, if self-employment income was not properly credited, or if your name and Social Security number did not match correctly, your benefit estimate could be wrong. And if your benefit estimate is wrong, your payment could be lower. Many seniors never check this. They assume the government has everything correct. But mistakes can happen, and even a small mistake in your earnings history can affect your monthly benefit for the rest of your life. So in 2026, if you were born before 1966, go to your My Social Security account and review your earnings record year by year. Look for missing years. Look for years showing 0 when you know you worked. Look for years where the number seems too low. If something looks wrong, contact the SSA and ask what proof is needed to correct the record. That proof may include W-2 forms, tax returns, pay stubs, or employer documents. Do not ignore this. A corrected earnings record can sometimes increase your benefit. The third thing you must check is whether you are receiving the correct spousal benefit. This is huge. Many married seniors do not realize that Social Security may allow one spouse to receive a benefit based on the other spouse's work record if that amount is higher than their own benefit. This does not mean everyone qualifies. It depends on your age, your spouse's benefit, your own benefit, and your filing situation. But many seniors never ask. For example, a wife may have worked part-time for many years while the husband had higher lifetime earnings, or a husband may have had lower earnings because he spent years in unstable work. In some cases, the lower earning spouse may be eligible for a spousal benefit that increases the total monthly amount. But here is where people get confused. You do not simply receive both benefits fully. Social Security compares amounts and may pay your own benefit first, then add an extra amount if the spousal benefit is higher. That is why you must ask the SSA directly. Am I receiving the highest benefit available to me based on my own record and my spouse's record? That one question could make a difference. The fourth thing you must check is divorced spouse benefits. If you were married for at least 10 years, are currently unmarried, and meet certain rules, you may be able to receive benefits based on your ex-spouse's work record. Many seniors have no idea this exists. Some think asking about an ex-spouse's record will reduce the ex-spouse's benefit. In many cases, it does not reduce their check. This is especially important for women who spent years raising children, working part-time, or earning less than their former spouse. But it can also apply to men. If you were born before 1966 and had a long marriage that ended in divorce, do not assume your own smaller benefit is the only amount available. Call SSA and ask if you qualify for divorced spouse benefits. This is not charity. This is part of the Social Security rules. If you qualify, you deserve to know. The fifth thing you must check is survivor benefits. This may be the most emotional part, but it is also one of the most important. If your spouse passed away, you may qualify for survivor benefits. In some cases, the surviving spouse can receive a higher benefit based on the deceased spouse's record. Many widows and widowers continue receiving the same payment without reviewing whether switching to survivor benefits could help them. Others do not understand when to claim, how age affects the benefit, or whether they should claim survivor benefits first and retirement benefits later. The rules can be complicated, so do not guess. Ask SSA directly. Am I receiving the highest amount available as a surviving spouse? If the answer is no, ask what options you have. The sixth thing to check is delayed retirement credits. If you waited beyond your full retirement age to claim Social Security, your monthly payment may be higher because of delayed retirement credits. These credits can increase your benefit up to age 70, but here is the key. If you delayed claiming, you should confirm that your benefit includes the proper delayed credits. Most of the time, SSA systems handle this automatically, but you should still verify. If you were born before 1966 and waited past full retirement age, check your award letter, your online account, or call SSA to make sure the increase is reflected correctly. This matters because delayed credits can create a meaningful difference in your monthly income. The seventh thing you must check is Medicare deductions. Some seniors see the COLA increase and then wonder why their actual bank deposit did not rise as much as expected. One reason may be Medicare Part B premiums. If Medicare premiums increase, that can reduce the amount you actually receive after deductions. So do not only look at the deposit, look at the full benefit statement. Check the gross Social Security amount, then check deductions, then check the net deposit. This is very important because your raise may be partly offset by Medicare costs. You need to understand the difference between your benefit amount and your final deposit. The eighth thing to check is tax withholding. Some seniors choose to have federal taxes withheld from Social Security. Others do not. If your withholding is too high, your monthly deposit may be lower than necessary. If your withholding is too low, you may face a tax bill later. This does not mean everyone should change withholding. It means you need to review it. If your income changed, if your spouse passed away, if you stopped working, or if your retirement account withdrawals changed, your tax situation may also change. Talk to a tax professional before making changes, but do not ignore it. The ninth thing to check is the retirement earnings test. If you are under full retirement age and still working while receiving Social Security, your benefits may be reduced if your earnings are above certain limits. But once you reach full retirement age, the earnings test no longer reduces your benefits. This is important because some seniors think the reduction lasts forever. In some cases, benefits may be recalculated later to account for months when benefits were withheld. So if you worked while claiming early, ask SSA whether your benefit has been adjusted correctly after reaching full retirement age. The 10th thing you must check is SSI or extra help programs. Some seniors focus only on Social Security retirement benefits and forget about programs that may help with Medicare premiums, prescription costs, food, utilities, or state assistance. If your income is limited, you may qualify for SSI, Medicare savings programs, extra help, SNAP, or local senior programs. These are not the same as Social Security retirement benefits, but they can affect how much money stays in your pocket each month. And for seniors living on fixed income, every dollar matters. Now let's talk about the phrase SSA owes you more money. This phrase gets attention, but you must understand it correctly. The SSA may not automatically owe every person born before 1966 a lump sum. That would be misleading. But some seniors may be underpaid because of errors, missed benefits, wrong records, or unclaimed options. That is the real issue. You must check your record. You must ask questions. You must compare options. You must not assume that silence means everything is correct. Here are the questions you should ask SSA in 2026. Am I receiving the highest benefit available on my record? Is my earnings history complete and correct? Do I qualify for spousal benefits? Do I qualify for divorced spouse benefits? Do I qualify for survivor benefits? Were my delayed retirement credits applied correctly? Did Medicare deductions reduce my net payment? Was my benefit recalculated after continued work? Could any past underpayment apply to my case? These questions are simple, but many seniors never ask them. If you are watching this video and you were born before 1966, take action this week. Log into your Social Security account, download your statement, review your earnings. Check your benefit amount. Compare your gross benefit and your net deposit. Then call SSA or visit a local office if something does not look right, and please be careful of scams. Whenever Social Security increases, rumors increase too. Scammers may call seniors and say, "You are owed more money, give us your Social Security number." Do not do that. SSA will not randomly call and pressure you for payment, gift cards, crypto, or banking passwords. If someone contacts you claiming they can unlock your benefit for a fee, be careful. Always use official SSA channels. Before we continue, if this information is helpful, like this video, subscribe to the channel, and comment 1966 below if you or someone in your family was born before 1966. That helps us know who needs these updates. Now let's create a practical example. Imagine a senior named Robert. Robert was born in 1962. He claimed Social Security early at 62 because he lost his job. His monthly check is lower than expected. In 2026, he gets a COLA increase, but it still feels small. Robert assumes that is all he can get. But then he checks his earnings record and sees 1 year missing from his highest earning period. He also learns his wife may be eligible for a spousal adjustment. Suddenly, the question is not just, what is my COLA? The question becomes, was my original benefit calculated correctly? That is why this matters. Now imagine a woman named Linda. She was married for 18 years, divorced, and never remarried. She receives a small benefit based on her own work record. She never asked about divorced spouse benefits because she thought it would involve contacting her ex-husband. But when she checks, she may discover she has options based on the rules. Again, not everyone qualifies, but if you never ask, you never know. Now imagine a widow named Carol. Her husband passed away years ago. She continued receiving her own retirement benefit because she did not understand survivor rules. After reviewing her case, she may find that survivor benefits could pay more. That is why seniors born before 1966 must review their benefits carefully in 2026. The biggest mistake is thinking SSA already knows everything. Yes, SSA has records. Yes, many payments are calculated correctly, but your life situation can change. Marriages end. Spouses pass away. Earnings records may contain mistakes. Medicare deductions change. Tax withholding changes. Working after claiming can affect recalculations. You are responsible for checking your own benefit, and the earlier you check, the better. Do not wait until December. Do not wait until a crisis. Do not wait until you hear a rumor on Facebook. Review your Social Security record now. Here's a simple action plan. Step 1. Create or log in to your My Social Security account. Step 2. Review your earnings record year by year. Step 3. Compare your current benefit amount with your latest notice. Step 4. Check deductions, including Medicare and taxes. Step 5. Ask SSA about spousal, divorced spouse, or survivor benefits if any apply. Step 6. Ask whether any recalculation or correction could increase your payment. Step 7. Keep copies of every document, letter, and confirmation number. This is how seniors protect themselves. Now here is another important point. If you are still working in 2026, your continued earnings may increase your benefit. SSA reviews your earnings record and may recalculate if your latest year of earnings replaces a lower year in your benefit calculation. So if you are working after retirement, do not assume your benefit is frozen forever. Check whether your new earnings could raise your monthly benefit. This is especially important for people who had low earning years earlier in life, but are earning more now. Again, it will not help everyone, but it can help some people. Now let's talk about people who have not claimed yet. If you were born before 1966 and you have not claimed Social Security yet, your decision is very important. Claiming early gives you money sooner but can reduce your monthly payment. Waiting until full retirement age gives you your full benefit. Waiting longer can increase the monthly amount up to age 70. There is no one perfect answer for everyone. It depends on your health, income, savings, spouse, taxes, work situation, and life expectancy. But do not make the decision based only on fear. Many seniors claim early because they hear rumors that Social Security is disappearing, but claiming early can permanently reduce your benefit. Before you file, compare the numbers. Ask SSA for estimates at different ages. Talk to a financial professional if possible. Your claiming age can affect the rest of your retirement. Now let's return to the title. Born before 1966, SSA owes you more money in 2026. The real message is this. If you were born before 1966, you are in the group that must check your benefit carefully. You may receive a COLA increase. You may qualify for a higher benefit based on delayed credits. You may have spousal or survivor options. You may have earnings corrections. You may have deductions affecting your deposit. You may have benefits you never asked about, but you will not know unless you check. And please remember this, Social Security is not just one simple check. It is a system with retirement benefits, disability benefits, survivor benefits, spousal benefits, divorced spouse rules, Medicare deductions, tax withholding, earnings tests, and annual adjustments. That is why confusion is common. But confusion can cost money. So here's your final checklist before you leave this video. Check your 2026 COLA notice. Check your gross benefit amount. Check your Medicare deductions. Check your tax withholding. Check your earnings record. Check spousal benefit eligibility. Check divorced spouse benefit eligibility. Check survivor benefit eligibility. Check delayed retirement credits. Check whether working after retirement triggered a recalculation. And most importantly, check using official SSA sources, not random calls or messages. If you found this video helpful, subscribe to the channel, like this video, and share it with another senior who was born before 1966. Also comment your state below, because many viewers are dealing with the same questions, and your comment helps this information reach more people. The bottom line is simple. In 2026, do not just accept your Social Security deposit without reviewing it. You worked for this money. You paid into the system. You deserve to know whether your benefit is correct. And if SSA does owe you more because of an error, missing record, wrong benefit type, or overlooked rule, the only way to find out is to check. Stay informed, stay careful, and never let confusion take money out of your retirement.